Good morning, guys. Just going to go through some swing trading setups for today, or welcome to this live Forex trading, swing trading stream. Just going to go, there's quite a lot of trends at the moment, but we didn't do a stream yesterday, so I'm going to cover a few more things on this stream. Mainly, we've got a lot of dollar movement at the moment, and we've also got a lot of Australian dollar stuff as well, which we covered in the previous live stream. And then a couple of the things that we also outlined to our members this week. So, going to go through and talk about those. And I'm going to start off here with the US dollar index, and we're going to start off with why we expected a little bit of short selling to come into the market this week. Basically, we had a commitment of trade, a sort of signal from this week. Basically, we saw that the commercials had increased their short positions quite substantially on the US dollar index. And we can see here that it has been, these short contracts are considerably high considering looking at the past sort of year or so. The only ones that stand out in terms of other previous short positions held by the commercials was all the way back in sort of 2019, 2018, which I think maybe we could have seen a bit of a push up. However, it looks like price has found sort of its resistance level, and we're starting to see a drop in the US dollar at the moment. But these short contracts from the commercials were quite high, so a reversal was significantly likely to happen for the US dollar. And if we go back into this dollar index, we can see that price has started to reject these previous swing highs. Now, what we said to our members was that what we want to see is a change in that 4-hour sentiment, because when we get the change in the 4-hour trend, it's a good sort of midterm sort of trend change where we can expect some further downside. And what we saw here on the dollar index is, we'll go to that 4-hour time frame, we broke through and closed below this swing low after the sort of news announcement yesterday of that CPI data, which was 94.22. Now that we're trading below this area, we're starting to see some further declines, and we're likely going to see a continuation of this, especially due to what we just looked at with the commercial data. Now, if the dollar index is going to continue to move lower, where could it move lower to? So if I just go up to this weekly time frame, I like to look at sort of weekly zones, and we can see that we've got this kind of previous area down here, which is around about 93.50, 93.47. That's kind of the first point where price could come into. We could see obviously price continue a little bit lower, maybe back into the sort of $92 area for the US dollar over the coming weeks. This could lead to some decent opportunities across the major pairs. And one opportunity that we outlined at the start of the week on our blog was this Australian US dollar long position. Okay, so if you go to our website, there's a link down below. You can go to the Learn More tab and then hit one of our blogs. This was the one that we talked about on the start of the week, and we talked about buying the Australian dollar. Yeah, if we actually go look at Aussie US dollar at the moment, price played out pretty perfectly here. We looked at the 4-hour time frame. We wanted to trade that 4-hour trend again, that nice midterm trend, and this is the position that we went for in the end. So price broke through that high, which was noted in the blog post, came back down. However, it rejected overnight, so we weren't in and around the markets at that point. Price then came down, and then we actually had one of our hourly swing trading setups down here. So if I go to the hourly time frame, see that the entry was just over here. Okay, so our swing trading strategy is basically 4-hour trend. When price comes back into that 4-hour structure zone. If we then go to the hourly time frame and the hourly closes above a 50 moving average, we look to enter a position in looking for that sort of trend to continue. So that's what we did there. Our stop loss went below a previous swing low, which was just down through here. We nearly got taken out in terms of price, dropped quite significantly after the CPI data, but recovered very quickly. And now prices obviously zoom into the upside, breaking through these previous structures as well. So what we'll do here is we'll continue to trade this trend up now, because we believe that the Australian dollar is going to get stronger and the dollar is getting weaker now. So we should continue to see an uptrend out of this market. So the next plan, or the next step for us, is if price pulls back into previous structure again, we're going to look for the exact same conditions as what we saw down here for another long opportunity. If we get another long opportunity at that point, we'll be moving our stops, managing our risk, looking for price to continue up to this main area here. Basically, decent level on the Australian dollar. If we look at the weekly time frame, previous weekly highs, we expect price to extend above this and move a little bit higher, but obviously price can find resistance at previous structure areas. I think if we break above this weekly high, we'll see another run up, possibly towards sort of 7,600, and then a run up into sort of 7,800s on the Australian dollar. And this is like a perfect commitment of traders report chart. We had significant long positions from the commercials on the Australian dollar, and then we've got significant short positions on the from the commercials on the US dollar. So it's almost a perfect commitment of trader report trade, and this market could go a significant way higher. We just need to follow the trend. If the 4-hour trend changes at any point, so let's say price rallies up into here and it double tops and sort of changes trend, then we're probably just entering the retracement phase of this move, and we could see price maybe fall a little bit deeper, maybe back into sort of that 7,313 again. But then when it changes back into trend, that's when we're going to continue to buy the market, okay? Because that's what we're trying to sort of do here on that swing trading strategy. So for instance, when we have this downward move here, when price pulls back into previous structure zone, so when it breaks, retests here, for instance, this is where we want to be actioning our positions. When it breaks, retests, that's where we want to be getting involved with the market. When it retests, okay, so we want to be looking for those swing trades and opportunities in line with the overall trend. So if price does pull back, we're going to be looking for some longs through here. Now, because we wanted to be a buyer of the Australian dollar this week, we wanted to look at it against some weaker currencies, and we pointed out another opportunity, or two other opportunities this week. The first one was on Aussie Swiss. So we actually showed this to our members the other day. We eventually took targets here at 1.3R, basically again following the overall trend of the market. I actually like Aussie Swiss from a higher time frame point of view. If we look at the monthly time frame, technically we have higher highs and higher lows. Prices come back into that structure area. Now, if the monthly is going to create this impulse phase, what we should see is a weekly uptrend with higher highs and higher lows. The way we can kind of prove that is if I highlight the previous impulse phase, I'll go to the weekly time frame. You can see that the market begins to form higher highs and higher lows until that changes. Okay, when it changes, then we're in that retracement phase. Now what we have is price making higher lows, higher highs. Okay, so we want to be trading that up to the next resistance level, which is this 6,900 sort of area, or 6,880 I've got marked in at the minute. And again, we just follow those rules of trend down. So when we have that weekly in an impulse phase, then we should see a daily making higher highs and higher lows. When the daily is in that impulsive phase, that's when we trade the 4-hour strategy and the 4-hour trend. So looking at this moving into that area here, we should see the daily forming higher highs and higher lows. It's a bit scrappy down here, but after this sort of consolidation, we do get the higher high, higher low pattern. Now, because we were in this impulsive phase here, what I wanted to do then was again transition down into the 4-hour trend. Once we did that, we could see a lot clearly that the market is making a higher high, higher low pattern after breaking out of that zone that we just looked at. Higher highs, higher lows. Price came back into the previous structure zone. All we had to do then was enter a position if the 1 hour gave us a swing trading position. And if we look here, basically price formed a close above the 50 moving average after a retest, which was this bearish close in there. We placed a buy stop order above the high, stop losses below the lows, and we targeted the ATR of the day, which was just sitting around about here, which was about a 1.3 R in the end. Okay, so that was a nice move. Now what we've got is a little bit different on Aussie Swiss, because actually the Swiss franc has become quite strong, and we know that the Swiss franc has become quite strong because if we actually go take a look at dollar Swiss, it's changed trend here. Price has broken out of this sort of head and shoulders pattern, so we can see clearly that the Swiss franc is very strong against the US dollar at the moment. And when you have two strong currencies trading against each other, you often see a range. And if we go back to that hourly, it's a lot clearer on that hourly. This is what we've had ever since that price on dollar Swiss has basically broken out and moved lower. We've got this range forming an Aussie Swiss because you've got two strong currencies against each other. At the time, back here, the Swiss franc wasn't very strong, okay? But now that that's flipped, we have this range going on. So Aussie Swiss now, not really the market that you want to be trading the Australian dollar against. You want to be trading it against other weak currencies. So, for instance, we've got euro, yen, and dollar now. So that's why Aussie US dollar's moving quite nicely. Aussie yen has been moving higher again. And, Euro Oz was another one that we pointed out as a potential short opportunity. Now, we didn't take Euro Oz short because we were Aussie Swiss long and Aussie US dollar long. So we don't want too much exposure. But I've put a thing here just to show you how you would have entered this particular position. And basically what we had, again, if we look at the daily movement in the market, we had this huge head and shoulders pattern. Okay, price is very bearish here. The euro on the daily is very bearish. Australian dollar very strong. What you want to look for in those conditions then is the 4-hour trend. So once we go into that 4-hour trend, we can see that the market is making lower lows and lower highs. Okay, now our job is just to identify those support and resistance levels. When price comes back into those support and resistance levels, we look for the hourly strategy setup. Now, I did want to see a deeper retracement on Euro Oz originally around about 157.95 or sort of 158. But price didn't get there. It actually just kind of made its own little high down through here. But again, that would then act as a potential resistance level in the future. If price had changed trend here, then we'd be looking at something completely different. We'd be looking at the Australian dollar sort of weakening against the euro. However, what we know about the Australian dollar at the moment is it's strong. We want to be buyers. And until that 4-hour changes trend, you should remain on that bearish sort of side of things. So again, price came up into the resistance level. When price hits the resistance level, your job then is to identify the strategy setup. The strategy setup comes when price closes below the 50 EMA, which is just through there. So if you'd entered a short position here with your stop losses above the swing high, price is eventually moved in your favor. Like I said, I didn't take this position. This is just one that we highlighted to our members. I personally took Aussie US dollar long and Aussie Swiss long. Those were sort of my chart that I wanted to take long. So I didn't want to add too much risk onto the Australian dollar. But if you were in this one, you are close to sort of targets, which would be this sort of structure down here, which would have been a 2R. So we'll see if that can continue down and create more trend, because if price can continue and break through lows, we'll look for the exact same thing again. If price pulls back, look for the 4-hour to be resistance and look for a continuation. Now, going back up to some other charts then, so we can go have a look at Euro US dollar. Not my favorite chart, to be honest, against the dollar, although it's the inverse of the dollar index. Euro's quite weak. So again, I don't really want to trade two weak currencies against each other. However, if the dollar index is going to drop significantly, we should see this market move higher. The 4 hour time frame has changed trend now. The market has basically formed this lower low, lower high pattern, and then it broke through, forming a higher high here. So technically, we do have trending conditions now. I wouldn't necessarily trade euro against much else apart from the US dollar, because obviously the dollar is getting weaker. Maybe the yen, but other than that, I wouldn't trade euro against other pairs at the moment. So if I'm honest, I would probably stay away from this one, but the trend is there. Looking at the pound then, so pound has finally broken out to the upside. I expected a breakout higher, to be honest, because price was forming a sort of nice range, but it was making higher lows within that range, and the dollar was getting weak, and we had those short contracts on the commercial side of things. So that was really something that I expected pound to break higher on. The only problem was this week we didn't really have any trend to work with. So we haven't traded anything on pound, but now price is starting to break through and form this higher high in the daily time frame. We can now begin to potentially look for those trending conditions. So for me, I'm going to sit out of pound until we get some kind of daily retracement phase. Now, what that would look like is if price was to pull back maybe into this sort of area. It seems to be a high traded area around about 136.30. So if price can continue up, great. If we then get a daily retracement phase, what a daily retracement phase would basically be a 4 hour downtrend. When that starts to flip down here and we start to see buyers come back in, that's where I'm going to be starting to look for longs on pound. But at the moment, this is still in that sort of transition of making that higher high. I want to see it come back down, potentially make a higher low in this area. If it does, we can start looking for those long positions on pound. But pound's looking pretty decent as well. Just needs to, move a little bit more. Going on to dollar CAD then. So actually wanted to be short dollar CAD this week. It just hasn't given us a setup at all. Basically, why do we want to be short dollar CAD? Well, like we said before, dollar's very weak. CAD is very strong. We highlighted that on this strength meter here, but we also highlighted that on our website. Just through here, we talked about the potential for the Canadian dollar to get stronger as well. The strength meter here is basically showing us that CAD is the green line, which is moving higher through there. It's a bit hard to see on that at the moment, but CAD is moving higher as well. So we wanted to be a buyer of the Canadian dollar. Just hasn't given us any kind of pullback at all to really work with. If I go to the 4 hour time frame, you can see that the areas that we had alerts set, so 125.43 was the original area I was hoping price would come back into. That would have been an area would have got short from. However, because CAD's so strong, it's just continued to make those lower lows, and we've got no sort of reason to get short yet. We need to see a retracement phase. Once that comes in, then maybe we could look for shorts from the previous lows. But yeah, nothing for us here right now. CAD's just been super strong, and we actually talked about this with our members last night. I actually put in a sort of a chart of CAD yen and the heat map, basically highlighting that we had a low ranging candlestick day. So low ranging candlesticks, if we look at this here on the daily time frame, low ranging candlesticks can often lead to impulsive phases. Okay, if I can just show you a few sort of examples while we're on this CAD yen chart. But if I was to show you a few, this was the one that we talked about last night. Now, a lot of traders would often get short on these because they see that the market has run up quite significantly, and they would be looking to short off of the back of that, thinking that price was going to drop all the way down to this point. Now, it still may do that. However, because CAD is so strong, yen is so weak, the likelihood is that price was going to continue to push to the upside. Now, some low ranging candlesticks that you can see, there's a really good example right in here and here. When you get these low ranging days, often there can be an impulsive move afterwards, and this can be really good to use in your trading because sometimes it's hard to pick out those candlesticks that you think are going to move or not. However, low ranging candlesticks are very clear to see on the charts. We actually pointed out one on gold, which I'll go over in a little bit. But basically, when you get these low ranging days, sometimes you can see some impulsive moves after it, which could offer you some trading opportunities the day after. Or as an end of day trader, you could look to sort of sell the lows here, for instance, or here, and trade them like that. I personally like to see price break and retest the previous structure highs. So if I actually show you CAD yen right now and go into the previous structure highs. So if we look at the 15-minute time frame in here, okay, we can see that price came back into the previous structure highs in here. Okay, broke out, retest, gives you a rejection candlestick. That's a perfect opportunity to buy CAD yen with a move higher. Okay, now because price has moved such a way on CAD yen, to be fair, the reward to risk is to the downside. Okay, because of that previous area of support and resistance. If I just go to that daily time frame, if you to say, well, I want to be a buyer of this market, you don't really want to buy it where it's at in the long term anyway. You don't want to say, I'm going to long term buy CAD yen above this high, because for a long term perspective, you've got to look at where you'd place your stop losses or where your safe stop loss would be. And if you're going to trade with the mindset of putting your stop losses below swing lows, your previous swing low is all the way down here. Now, that's not great. Okay, it's not where you want to be putting your stop losses in the market. You want to have sort of a decent stop that will allow the market to breathe, but you want to also have that sort of nice reward to risk. Now, the market would have to move a hell of a long way for you to actually get anything out of the market with a trade like that. So what you want to do is wait for price to pull back into a significant area of support or resistance. Now, I personally like to look at previous structures and previous areas of support and resistance, because they're basically the most recent areas. So I would prefer CAD yen to be back down at 88, 83, okay, because that's where the market previously found some slight resistance. Okay, so I would like price to come back down to this point. Will it get back to there? I don't know. We can't predict that. I don't know where the price will get back to this point. It may not. If it does, though, I know that this is a possible area. If the trend conditions remain the same, this is a possible area that I'd like to be long from. It may move a little bit lower, and the reason why I say that is because of the weekly time frame. Okay, because like we said before, if you're looking at trading in a monthly impulse phase, you will get higher highs and higher lows on a weekly time frame. Now, if we look at this here, we can see that price came back into these previous highs on CAD yen through there on the monthly time frame. It then forms these nice candlesticks where we have lots of wicks to the downside. They're closing back within each other's ranges. We then get a really nice bullish inside candlestick. That is a really good sign that an impulsive phase could begin in the market. Okay, now what we should see if that impulse phase is going to form, like I said, higher highs, higher lows on the weekly. Now, if we actually look at the weekly time frame, we don't have technically a second higher low yet. We have this one here. Okay, that low is higher than this low, and we have the higher high pattern. So if I was asking myself the question, where would I want to be long in this market? Well, I'd want to be long from previous structure, which is like through this zone here on that weekly time frame. Okay, because that's almost like a double bottom pattern. price has broken through the neckline, I would like to see price retest the neckline and move to the upside. Okay, if that was an hourly chart, that is exactly what I'd be looking at. So I want to see price pull back. If we are going to see that price pull back, then we should see daily lower lows and lower highs, and we've just got to be patient and wait to see, for one, if price will start to pull back. And at the moment, we have no sign that it will. So with CAD yen at the moment, I like short-term trades to the upside. I think we've got potential for this market to reach this major key level. In the sort of bigger picture, I would like to see a really decent move down, but we have no way of telling that's going to happen yet because price has not moved in that direction. So what we could wait for is some kind of daily change in trend. That would be like a double top or something like that, or a head and shoulders pattern. That could be a sign that price is going to move down again, potentially. So anything like that to suggest that the market is going to start moving lower, great. We could maybe try and target these areas down here for price in the future. But right now, low ranging candlestick, market is very bullish CAD, very bearish on the yen. Stick to sort of buying CAD yen in the very, very short term. Going on to some other charts of interest then. So let's go back to some of those majors, because dollar yen is one of those which has continued to push higher as well. So the yen's very weak. However, what we've got now is a weak dollar and a weak yen. So what that usually causes is a range. And if we go to the hourly time frame at the moment, just because this is sort of the fresh range that we're seeing in the market, price is trading within this 113.80 and 113 area. So about an 80 pip range at the moment. Now, what we want to see is one to give up basically first, and because the yen has been moving so aggressively short for longer than the US dollar, we may see the yen start to strengthen a little bit first, and if it does, then we're likely going to see a breakout. Now, I would only look at yen getting stronger if we were to sort of break these lows down here at 113. If we did that, then I'd say, okay, maybe that yen strength is going to start coming into the market, and especially against the US dollar, so we can start looking for that. It's just interesting to see that yesterday we had this kind of bearish close in here after a long move up. You know, again, if we're looking at it from a trend perspective and we see higher highs and higher lows, you know, where do we want to be long from? Well, we want to be long at 111.99 or 112, just to round it up by a pip. You know, that is where I would want to be a buyer of the trend. So if price is going to start entering that bearish phase in here, then what we should see is that 4-hour change trend and make lower lows and lower highs to that point. When it gets there, change trend. And again, we can prove that by looking at the previous impulse phases and retracement phases, which is here and here. If we're going to the 4-hour time frame, you can see that price double tops, makes a lower low, lower high, lower low, lower high before it bounces and it changes trend. When it changes trend, this is a sign that we're going to start moving back into that impulsive phase. And look what happens to price after. We again make higher highs and higher lows. Very aggressive move, because obviously yen was very weak at that point. So it was a huge aggressive move to the upside, but you get the sort of the gist there, where we have that impulsive phase. The market's going to make higher highs and higher lows. Look for the same here now. You know, if price starts to break out of this low, this significant low here, then we can start looking for a move back down to 112, where we can then look for that change in trend again. And it's just rinse and repeat. Okay. So dollar Swiss is interesting. We kind of touched upon it a little bit. Dollar Swiss has broken out of this head and shoulders pattern. Maybe going to see some downside to dollar Swiss as well. This is a decent level down on dollar Swiss, around about 9040. Okay, so huge area here. If we look at the 4-hour time frame, we're just straight lining at the moment. So what I want to see is a retracement phase, pull back into some areas of support and resistance. So maybe into this horizontal level here or into the neckline area. Quite like the neckline area because it also lines up with some recent breakout lows in there. Okay, so if price can kind of retest this area, find resistance, this may be a good shorting opportunity on dollar Swiss. So I'm actually going to set an alert there. I'll set alerts around about 9,250, around about that point. I'll see if price can get back to there, because if price was or hasn't moved so aggressively downwards, then it may offer us an hourly trade. If price can pull back, yeah, you can see that 50 moving average has not sort of passed through that alert yet. So if we could see this pull back on the 4-hour time frame, get into this area, if we see the hourly then close below the 50 moving average, that'd be a nice short position in here on dollar Swiss. So keep it on that one as well. Lots to go through today. Euro Swiss as well. So Swiss is getting stronger. We have to look at the trade against weaker currencies. Euro is weak, yen is weak. So we need to look at the Swiss franc gaining strength against those currencies. And we actually had a trade short on Euro Swiss last week. If you go back through the previous streams, we actually got short up here on Euro Swiss. Price then consolidated in this area, and what we were waiting for was that 4-hour continuation trade, and the market's now broken to the downside. We have a new lower low being formed here. So again, rinse and repeat. What we're going to be looking for is a pullback. If we can get that pullback, want to be looking for those short positions through here. So I'm actually again going to just add an alert here for Euro Swiss, see if price can pull back into that point. If it does, then we can try and execute the hourly sort of trading strategy through there. Let's go and look at Euro Pound as well. Again, pound getting stronger, Euro weak. You should be seeing a trend form on here. Here we go. Price is breaking to the downside here on Euro Pound. Likely going to see some further downside here as well. We've got the Bank of England as well, basically saying that they're likely to hike interest rates quite a bit. Oh, sorry, coffee's going cold. They're going to hike interest rates quite a bit. So, and I expect them to kind of do it quite aggressively, by at least 1.25%. So if that's the case, then we may start to see pound strengthen slightly against the euro. Could see a break and retest of this zone. And again, this would be an area where I just apply the hourly sort of strategy. Let's quickly just touch upon gold then, because gold has rallied higher, and it was something that we're beginning to feature as a email alert. And let me just bring up the image in here. 1 second. Let's just bring this on the screen. So on Monday, let's just go to the daily time frame here. On Monday, basically, we have this alert going out. Okay, so basically we had this close on Monday. Okay, so if we look at the sort of picture here, let's just go back. What we basically looked at was the fact that gold had created this new higher high. And again, what we look for is these low ranging candlesticks. And you can see here that Monday we had this low ranging day formed. And what we're trying to do is set up a sort of an email alert to show you, there is a low ranging candlestick forming here. If we look at the image, basically we put that gold is forming an LDR candle, which could offer a trading opportunity. When this type of candlestick forms, we can often see an impulsive day follow. If the price breaks the daily high, we can look for a long opportunity. Alternatively, we can look for a break of the Asia range. Now, if we actually have a look at the move that we saw then after that, what tends to happen, or what we see happen when we have these low ranging days, the price will break the previous high or low. Obviously, you have to determine the direction by strength and weakness, or if you wanted to be short the dollar, for instance, the dollar was at resistance at this point, then you get the opportunity to get involved with the market. Now, if I go to a lower time frame and we just take a look at what happened here on gold in the end. So this was the low ranging day through here. Basically, what I have on my chart is the previous day high and low, which are these white lines through here. Okay, and price basically broke through the highs. All right, so price broke through the highs. Didn't really give us a clear opportunity to get on a trade, unfortunately. But we could have looked maybe at this sort of break and retest here. That could have been an option to get long, because what you'd want to do is, once price has proven that it's breaking itself to the upside, you could look at getting long with your stop losses below the previous swing lows and then target that sort of impulsive move. You could also look at the Asia range. Let me just pop the Asia range on here. Okay, and you can see that price actually breaks and retests the overnight Asian range just through here. So again, around that area, you could be looking for long positions in the market with your stop losses below the Asia range low or the daily lows. Now that would give you a really good risk reward position on gold. Okay, so that was very similar to what we talked about there on CAD yen. It also popped up on Swiss yen, which we talked about with our members as well, which was this low ranging day through here. Again, yen very weak at the moment, so you only want to be selling the yen. And if we look at the 15-minute through here, price broke, retested the previous day high, and then continued to make its way higher. Okay, so that's what we look for when we see those low ranging daily candlesticks. Okay, and if you want to receive that email alert, we haven't started sending them out yet, so it's brand new. We're going to start this very soon. If you go to our website, if you go to the currency strength meter on the website, move all the way to the bottom, it'll say join our mailing list below. All you need to do is drop your email in there, click join now. We'll get a little email just with your email on, and we will start sending these out very, very soon. Okay, so basically we'll send you these low ranging days. We'll tell you what our kind of thoughts are involving the strength meter and the sort of positions that we believe could potentially happen, and then it's up to you to apply that. So if you're interested in that, head over to our website. There is a link down below. It should be the strength meter page. If you're interested in that, jump on that. And thanks for watching this stream. I'm going to end it here. Hopefully we get some continuations of these trends that we've gone through. But thanks for joining me today, and I will speak to you next week. Cheers.